Good morning friends and welcome to the pre-market view. US markets continue to show a lot of strength and are at a record level on the back of much better than expected non-farm payroll data that came in at about 1,65,000 versus expectations of 1,45,000, and the S&P has crossed almost 1600 level. Most of the indices in US are at all-time high. Even Dow is almost at around 15,000 levels, and more importantly, the unemployment rate stands at about 4.2, which is at all-time low, and this is on the back of extremely good set of data points on a consistent basis over the last couple of months. European markets too were very good, and they were up anywhere from about 1 to 2%. However, the data that came out from Eurozone in terms of unemployment was not encouraging, and the unemployment rate continues to be at almost about 11.5 to 12%, which is definitely not comforting. And when we look at the Asian markets today morning, Japan is shut, and most of the other markets like Korea, Hang Seng, they are up about 0.5%. And one important data point that came out from China today morning, which was the HSBC PMI services data for China, came in at about 51.1 versus about 54.3 in the previous year. So definitely there is some amount of slowdown being witnessed in China. And in terms of flows, friends, FIs were net biased in the cash market to the tune of almost about 600 crore, and the domestic institutions were sellers in the cash market to the tune of about 793 crore, and in the index futures, FIs were net biased to the tune of about 11 odd crore, not much of an activity. And on Friday, we had an important credit policy, and the repo rate cut has been to the tune of about 25 basis points, which was definitely in line with market expectations. But given the fact that the market had run up quite a bit in the past about 10 to 15 sessions, and the fact that the commodity prices had cooled off, there was definitely a higher expectation. So the moment the RBI credit policy was announced, there was a quick knee-jerk negative reaction in the rate sensitive sectors and banking in particular. But given the fact that we have a extremely good strong global cues, there could be some amount of positive uptick in today's market. But the fact that we have not much of triggers from this RBI credit policy to the earnings season, there might not be a big movement in the market, at least of the next couple of weeks. That's what the sense is. And on that note, let me invite Sadhna to take us through important F&O cues, data and strategies that we can have in the F&O market.
Good morning friends, let's have a view on derivatives. On Friday, markets fell after hitting a 3 months high. Though RBI has reduced key rates by 25 basis points, but RBI has cautioned that it has limited room for further monetary easing. In this period, we have seen around 2 lakh shares were reduced in open interest, and Nifty futures premium also decreased from 8 points to 4 points. That means long closure has been taken place by market participants. And PCR also increased at 1.12 levels. That means put option has added around 25 lakh shares in open interest, and call option has added around 3 lakh shares in open interest. We have seen in the strikes of 5,600, 5,700 followed by 5,800. Put option has seen a good accumulation, and 6,000 and 6,100 call option also has added a good number of accumulation. As we have seen, around 55 lakh shares and 54 lakh shares respectively added in 6,000 and 6,100 call option. Overall, our bias for the market is negative. Our lower range for the market would be 5850 to 5800, and higher range is 6000. And on closing basis, 6000 may act as a stiff resistance. Thank you.
Here are the important news and events that we are tracking today. Global rating agency Moody's has decided to keep India's rating stable, both rating and outlook stable for the next at least about 12 to 18 months, given that no major positive or negative triggers to look at in the short run. And in another development, NMDC has decided to retain the prices of iron ore lumps and fines exactly as per the previous month, which is currently ruling at about 4,600 and about 2,610 for both the commodities at this point of time. Reliance Industries has decided to surrender about 10 exploration blocks in the Krishna Godavari basin, including the one held by the Hardy Oil, because those blocks are not considered to be good in terms of potential development. And in another development, Hindustan Construction Company HCC is looking at raising about 1,000 crore by selling off non-core assets over a period of time. Ultratech is looking at increasing its capacity at its Rajasthan plant by about 2.9 million tons in the cement, and they are also looking at setting up 2 grinding units, which will involve a total capital outlay of almost about 2,000 crore. And NALCO may have to cut its production by almost about 25%, as it's facing some supply shortage in the coal because of the accident at one of its mines. So there could be some negative reaction in the NALCO stock in today's market. NTPC has crossed an important hurdle in getting the environment approval for one of its plants in MP, which will increase the power capacity by almost about 1600 megawatts. We've also seen a good amount of institutional buying in the NTPC stock over the past about 1 week. So one can go long on NTPC with a stop loss of 156 and a target of about 164 to about 167. Reliance Communications, some positive news, as the company is looking at increasing the rates of its bulk discounted calling plans anywhere from about 20 to about 60%. So one can go long on RCOM with a stop loss of 107.5 and a target of about 113 to about 116. Aurobindo Pharma, some positive news, as the company has got US FDA's approval for one of the products called tamsulosin hydrochloride tablets, which will have a total market size of almost about $244 million in US. So one can go long on Aurobindo with a stop loss of 193 and a target of about 203 to about 207. ABG Shipyard, some positive news, as one of the office buildings has been sold to Renewal Group for a total amount of almost about 245 crore. So one can go long on ABG Shipyard with a stop loss of 312 and a target of about 328 to about 334. That's it from all of us, friends. Have a great trading session and see you tomorrow at the same time.